Yeah, good morning, everyone. So my name is Jay Tickham, and I'm the Managing Director of Vedamvi. Today I'm going to talk to you about launching a financial services business. So thanks for signing up to this webinar. Just a little bit of housekeeping rules. Webinars can be quite resource intensive, so if you would close all apps and emails, that'll actually help make sure that it's a smooth experience for you. Also, at the end, we're going to talk about regulation, which seems to be a question that many people have kind of asked. So, do stay on till the end. And there's also a Q&A session where I'll answer your questions. So, session should last about 45 minutes, and we'll then try and reach for 15 minutes of Q&A. So just as the starting point, the agenda, we'll talk a little bit about the world of startups and then why people are starting up businesses, and then why specifically a financial services business is the right kind of business that you should be starting if you are thinking of starting one. Also, I think financial services businesses are not for everyone. So, we'll go through kind of the areas where if you're not comfortable with these things, then financial services business is not for you. And then I think there's a lot of question about what is fintech. So we'll spend a bit of time understanding the world of fintech. And then if you decide to kick into a business, then understanding which is the right business model for you. We'll spend a little bit of time on how to successfully launch. Obviously, this is just an hour presentation, so we'll cover as much as we can. And then finally, as I say, we'll talk about regulation, because that seems to be a hot topic that most people are asking. So just in terms of the questions that we've got so far, so first one is, what are the regulatory constraints and what's the licensing process? People want a clear direction on what's realistic. Obviously, starting a financial services business is quite complex, so that's a question we'll go through during the presentation. Learning more about fintech, and I certainly will cover that. Why a financial services business? Again, that's covered. What the ecosystem looks like and what support is available, and also how to set up a business, a financial services business. So let's kick in. So a little bit about the Vedamvi. Vedamvi was started in 2012. We're a highly boutique advisory firm. We only work with a select few clients every year. To make sure that we can obviously work very, very closely and hands-on with the fintech firms. So we kind of work with the launch businesses. We've helped to launch a few businesses. We help firms that are kind of stuck in growing or have reached the kind of growth ceiling. And what the firm was really built on was on regulatory licensing and compliance. So that's kind of the key strength that we have. We also do training and coaching. A little bit about me. I've worked in financial services for roughly about 22 years, working with some of the largest financial services firms in the world. I've done quite a lot. I've been a banker, I've been an insurer, I've actually been a regulator as well, and then most recently a consultant. I spent quite a bit of time consulting. I've done a lot of regulatory change. Recently, I launched a peer-to-peer lending business for one of my clients. I've personally started 2 consultancy businesses. And my experience previously, before starting financial services, was in electronic engineering, and I was a patent lawyer. So, a combination of that actually is quite useful when it comes to fintech. Why we do what we do in terms of Vedamvi, we believe that the financial services industry needs a radical transformation. That currently firms are kind of hoarding money, and therefore we've got global wealth inequality and also systemic risk that we've seen in 2008. We believe that a new order financial system can bring greater financial inclusion and global prosperity, as well as safety for the system. And I think this is important. We think that the new players are the only ones that can really transform the industry. And if I always use the example of Amazon. If Amazon became a Walmart, we wouldn't have the Amazon that we have today. And Amazon was created, literally as a new entity. So similarly, we think the next Amazon in financial services will come from a startup rather than an incumbent player. And I think, what we really are to do is we want to help you succeed. So we want more of financial services firms coming into the system. And that's kind of what we set ourselves out to do. So just moving on then, in terms of startups, it seems like startups are quite fashionable these days and everyone's talking about it and everyone seems to be doing it. And certainly from a UK perspective, we can see that year on year, the number of startups are just keep on growing. So literally in 2016, there were 657,000 new startups. And if you look generally across year on year, there's about 5.7 million private businesses in the UK. And that number is kind of just steadily increasing. Now that's interesting because it shows that the failure rate obviously seems to be less than the number of firms actually starting out. So not just firms are starting up, but they're also kind of succeeding and failing less than previously. So that's an interesting statistic. And a little bit of exploring why people do this. So the biggest reason I think is pursuit of freedom. The freedom in terms of finance as well as time. And as someone once said, you measure wealth not in terms of money, but in terms of time. So if you could earn, even £100,000 a year without working, you're a lot more wealthier than someone who earns £10 million a year, but has to work literally, 15 hours a day. So I think most people are kind of searching for that freedom. I think you'll find a lot of corporate people have a lifelong dream to become entrepreneurs. And when they reach a certain point in their life, they have the opportunity to actually jump into that space. Some people want to make a meaningful difference in the world, and certainly that's the case in the fintech area, where people want more financial inclusion when you deliver a better service to customers. Redundancy is an interesting one. I think rarely do you find people who are made redundant who would start a financial services business because it's usually resource intensive. It needs quite a bit of thought before you go into that space. And now obviously it's possible to start a business a lot more easier than it was before. And I think there's a lot of new ideas flowing around as well. So on that point, I think that's a good point to kind of transition into why start a financial services business. I think there's 5 reasons which are key, and we'll go through each one of them. So I think the first one is that this industry is undergoing massive change. If you look in the past few decades, financial services really didn't change much. And it's only now, since the financial crisis, that the sector is getting disrupted. And wherever there's disruption, there's huge opportunity. So Russell Reynolds actually went out and did a survey of executives in the industry, and the results really came out that if you think of consumer financial services, they believed was one of the industries that's going to be hugely disrupted. Now, I think the reason why this is such an exciting time is, we've got, and I'm sure everyone's heard about Bitcoin and cryptocurrencies recently, and then obviously blockchain. Blockchain is definitely an interesting area. Artificial intelligence and robo-advice. Now, if you look at blockchain and cryptocurrency, that has the potential to literally bypass all financial services. And I think we're now at such an exciting time that you could compare this in history to when the likes of a JP Morgan or a Morgan Stanley started. So any firm that starts in this space could really disrupt and become kind of the next giants in financial services. So I think this is definitely an unprecedented time. The rate of change is kind of leveling the playing field, and now new players can come in and quickly ramp up and become dominant financial services players in the future. The Bank of England did a stress test recently within the UK context, and conservatively they estimated that fintechs will take away roughly about 1 billion in profit from banks annually. Most people think that that's going to be a very conservative estimate, and there's probably going to be a bigger dent as far as banks are concerned. So the second thing, and this is quite interesting. So in the wake of the financial crisis in 2008, the regulators realized that the financial system was very concentrated, and obviously that led to the economy being impacted not just in the country where the banks fail, but literally across the world because of contagion risk. So they literally encouraged for more competition to come in. And ever since then have been trying to find ways of actually broadening more players coming into the space. So out of the startups, the statistic that I showed you previously, there's only 2%, which is 86,000 out of 5.7 million, that are financial services business. So certainly the government and regulators are encouraging more competition in this space. And the way that, at least in the UK, and I'm sure this is especially relevant for firms and countries outside of the UK. So in terms of the regulators are, interestingly enough, the FCA and the PRA in the UK have a competition mandate. So one of their objectives is to actually promote competition in the industry. And I think that is a world first. Where a regulator was given such a mandate. And as a result of that, the FCA, or Financial Conduct Authority, has set up an innovation hub. And that hub is really there to promote innovation. They'll support innovative businesses. They've also launched a regulatory sandbox where you can go in and test your proposition in a live environment. And then the Bank of England's actually got a startup unit. So they started that in 2013, and I think there's been about 50 odd banks that are kind of going through that process. Prior to that, if you looked at the landscape, there were hardly any new banks that were coming through. I'll talk a little bit about open banking standards and the Payment Services Directive. But this is quite radical. It means that banks have to actually open up their data via APIs to third-party players. There's a SME loan referral scheme, so if you're a peer-to-peer lender, then if a bank can't give a loan to an SME, they have to refer that loan into a pool where alternative lenders can go in basically and decide to fund that. So that just came in literally last year. And the regulator, obviously in the UK at least, is cross-border collaboration is something that they're actively encouraging to make sure that there's expansion opportunities for firms in the UK and firms wanting to come into the UK. So a little bit about the Payment Services Directive and open banking. So why I thought that is quite interesting is because from January this year, there's 2 new financial services companies that will come into existence that didn't exist before. So an account information services provider, a payment initiation service provider. So if you look at the account information, you could set up a business where basically you could go to 5 or 6 or 7 different banks, get different information, present that to your customer, and help them manage their finances better. And similarly, from a payment perspective, you could get an instruction from your client and then go into the 4 or 5 different banks or financial services providers and actually do a payment directly out. So no longer do the customer have to kind of go into their bank and set up the payment. You can tap into that data. So these are 2 new opportunities, I think, that are quite interesting to look at, resulting directly from regulation. So the third reason why financial services business is so attractive is because it is actually quite profitable. I will send these slides around, so apologies if you can't see this, but I think the point to make here is that on average, research has shown that a fintech firm can go from 0 to being a 1 billion value company in as little as 6 years, which is staggering. If you see some of the big Chinese players, they started in 2014, and if you look at Ant Financial, it's now literally a 60 billion dollar business in a short space of literally just about 3 years, 3 to 4 years. So I think the valuations in the space can ramp up significantly quickly. And obviously, if you're in the business for an exit, then you can have a very, very attractive exit when you kind of done with the business and decide to sell it or get it merged with a bigger entity. The profitability is interesting. So, I think fintech firms as they're growing are kind of not going to make a huge amount of profit. But the end stage, so if you look at top Fortune 500 firms by revenue, you'll see that there's only one financial services firm in there, which is Berkshire Hathaway. But if you flip that and look at profitability, then you've got about 5 firms that are financial services firms. And on average, they're making anywhere between sort of 19 to 23% margins, which are quite huge. Now, you may say that banks obviously are ripping their customers off, and that may well be the case. But in the case of fintech, even if you dropped your fees to your clients, you can make huge margins because there's a huge amount of cost savings, given that you can leverage technology. So that's certainly worth looking at. I think just to mention, these are sort of 4 examples which show that just ordinary people like you and me can go on to do great things. So if I look at Stripe is a payment company. These are brothers that literally started in their 20s. They were tinkering around being entrepreneurs prior to that, when they got the idea to create a payment company, and that business is now worth I think 6 to 8 billion. Zenefits is a HR software company. That business grew literally from 0 to $1 billion in just over a year. The founder is interesting. He was an employee. He became an entrepreneur. He was literally thrown out as a CEO. And he also got thrown out from Zenefits being the CEO. So that's an interesting story. TransferWise, these guys, one of them worked at Skype, the other one was a financial advisor. And Funding Circle in the UK, these guys literally were just young consultants working in the city. So I think it's just to really make the point that it is possible for ordinary people like you and me to do great things now. Obviously, these guys got a lot of money behind them, but it was easy because the idea was good. It's easy for them to convince investors to invest in them. So the next reason is you can make a meaningful difference. We talked about financial inclusion. If you think of places like Kenya, for example, government or literally anyone couldn't get money out to people out in the rural areas. So with mobile banking, that literally revolutionized access to finance for a lot of these people who were unbanked. There's about 2 billion people around the world that's still unbanked. So areas where you can make a difference is payment and remittance. If you think of migrant people sending money to their families, that market is worth about 400 billion. 10% of that literally goes into banks in terms of fees, and that comes out of the pockets of these migrant workers. So if you could have a system where you reduce that cost to a lot less, that'll have a huge impact to the lives of these people. And then if you haven't got a lot of data, you haven't got a bank account, it's very, very hard to get credit. So there are organizations now that are starting to find ways of incorporating data. For example, mobile payment use, and how these guys are paying the bills. So they factor that into credit assessment and come up with credit scores. Access to finance, if you look at peer-to-peer lending in the UK, because of that industry, there's a huge amount of SMEs that wouldn't have got finance from banks, and now all of a sudden were able to access finance and grow their business. And then obviously there's this kind of managing money and education, which again helps these people to manage their money better and kind of live a better life. So there's a huge opportunity to make a significant difference with financial services. And finally, I think the investors are definitely interested in this case. Now, if you look at this graph, you can see that in 2015, there was a peak, and this was a bit of a frenzy. It's a normal hype curve. You'll see that an industry starts to emerge, investor starts to get in, and every Tom, Dick, and Harry, like a Bitcoin, for example, wants to go in and invest in a fintech company. Obviously, that market rationalizes, and obviously, 2016, 2017, we saw rationalization taking place. But according to a KPMG report, things are on the upbeat. And the interesting thing is that now you're seeing more venture capital and private equity firms starting to come into this space at a later stage. So there's definitely funding still around, and that funding is now starting to take off again, but obviously in a more rational sense. The valuations that happened in 2015 were just kind of extraordinary, and I don't think we'll see those again. It's going to be more realistic going forward. So hopefully that convinces you that a financial services business is kind of the right business for you to start. The reasons why you shouldn't start a financial services business. So I think if you don't have a bigger purpose, then I believe it's going to be really hard to get traction in this space. So firms that really go out there and want to make a difference, not just make a huge amount of money for themselves, but want to kind of change the world, they seem to get more attention, more traction. Also, a Me Too offering, if you want to start a peer-to-peer lending business now, it's a lot more difficult than it would have been 2 or 3 years ago. So I think, if you're going for a Me Too, it's possible, but you're not going to be able to build a hugely fast-growing business. Fintech is obviously about financial services as it's much about technology. And I believe if you don't have at least somebody with knowledge in financial services on your team, then I think you could struggle. Now that can be outsourced. You could sort of bring people in from the outside, but you certainly need their experience on your team. It's unlikely you're going to be able to build a financial services business without bootstrapping. So a high growth firm needs high fuel, and you would certainly need money to build a high growth business. Now that's not to say that you can't build a financial services business if you don't have money. You can start as a solopreneur. But then you'd be doing more than a financial planning, one-man band, broking type of businesses. Again, to build a huge business, we'll need a team. I haven't seen any sort of one-man band sort of coming in. Generally, when there's 2 founders, that business tends to succeed a lot quicker. If you don't like regulation and compliance, then this is not an industry for you. And similarly, if you're not into tech and innovation, then if that doesn't excite you, then I think this industry is not going to be very suitable for you. Competition is huge. So you're going to get competition from new startups, and certainly banks and other financial services firms are not sitting by. So they pose a huge amount of challenge in this space. And I think from a regulator's perspective, you need to learn to love your customer, and everything needs to be geared around customers. Winning customer trust, I think, is going to be one of the biggest challenges for a new financial services firm. So if that's not something that you resonate with, then I think this kind of business is potentially not suitable for you. So what is fintech? Let's just go through that, because certainly there were some questions about that. I think, as I mentioned, fintech is about finance and technology, and you certainly need both sides of the component. Now, if you're strong in finance, you can acquire the technology. I've seen many people that come from a technology background and don't have the financial services experience. They generally could end up in trouble. So I think we need both, and just a point to make there. Now, to define fintech is a very broad area. I'd define it by the impact it brings about. So I kind of classify the impact into 3 areas. Either you setting up a firm to disrupt the industry, which means you're creating a new type of financial services business that didn't exist before. You want to bring about efficiencies. So if banks are charging too much, you want to bring a service which charges less, and it's better, cheaper, faster. Or you want to have kind of a better customer experience. Now, generally, I find disruptors are mainly sort of startups, and the efficiency and customer experience. Currently, big incumbent firms are looking at that space. But there's no reason why you couldn't look at something that's not working, one specific area that's not working in banking or insurance, and then go out there and build a firm to address that specifically. And that can certainly be quite lucrative. In terms of what type of business, so I've kind of classified it into 6 areas. So firstly, you can become a primary financial services provider, like a bank, an insurance company, investment management firm, and we'll go through that in a minute. You can become a broker, an intermediary, where you facilitate a transaction between a bank and a customer. You can set up an exchange. There's quite a few exchange type of ideas where you allow people to buy and sell shares or give loans to each other. And then you can aggregate. So if you think of money supermarkets, they bring different financial products onto one platform and allow for comparison. The data and education, so either you've got sort of benchmarking data that allows investors to analyze stocks, for example, or you've got some education type of service that you're offering to customers. Also, if you're a credit reference agency, for example, then that's a good example as well. And then alternatively, you can create supporting infrastructure to help financial services firms actually either improve efficiency or enhance customer experience. Now, I think if you look at these 5, apart from support and infrastructure, generally those will fall into the regulated camp. If you're setting up an infrastructure business, broadly speaking, that'll probably fall outside of the regulated space. So just to mention, there's a link, and I will send these slides. I've got a taxonomy map where I've kind of mapped out the different areas of fintech. It needs to be updated, and it is kind of being updated regularly. So, I would kind of encourage you to look at that. Just by way of example, I just wanted to give you 3 examples in each space. So if you set up a primary financial services provider, then I classify that into 5 areas. One is lending and savings, securities, payments, investment management, and insurance. So in lending, for example, you could set up a peer-to-peer lending business. You could set up a digital bank and a balance sheet. Now, one of the questions was what's realistic and what's not realistic. Setting up a P2P platform is possible, and I've seen sort of many ordinary people do it, and we've recently done it for an entrepreneur. I think setting up a bank, even if it's a digital bank, it's a totally different ballgame, and that's a lot bigger scale. It needs a lot more money up front, and it takes you a long time to build. So if you were just kind of 2 or 3 people wanting to start out with very little capital, then I would say digital banks or banking generally is going to be a tougher proposition compared to P2P. And in that case, I would say, start out with P2P, build your business up, get funding, get confidence from investors in the market, and then as an expansion strategy, then go and become a digital bank rather than starting from day one. You could also be a balance sheet lender, where if you've got loads of money, or if you've got access to wealthy individuals, then effectively you could lend money that you accumulate from high net worth investors. Just quickly, in terms of insurance, distribution is one option, P2P insurance, and to become a primary insurance provider. Again, in this space, being an insurer is a hugely capital intensive exercise. So you need a big pot of money to be able to pay out claims, and it's not something I think that just a few bunch of guys starting out would be able to do without a significant amount of capital. Investment management, so there's robo-advice, where this is kind of automated investing. You could set up a fund, and also financial planning business, where you help people manage their money. Now again, I think in this space, setting up a fund is possible, but hugely expensive. I think looking at in the UK at least, nothing less than about £100,000 before you actually set up a fund. So just bear that in mind, and also if you don't have huge amount of experience, you're going to find it very, very difficult to attract investors. So payments, there's the sort of general FX and remittance type of business. Then there's quite a few very successful firms in that space. You can set up a digital wallet system where that is something that is kind of part of the payment ecosystem. Or e-money, so you could have a card, for example, where people can load on money and spend that money. So e-money is another option. And finally, in securities, you can have crowdfunding, you can have research. And I think one area that's kind of neglected at the moment is fintech in the investment banking space. And I believe that that's going to be the next big area, is to look at how fintech can be used to kind of disrupt the investment banking space. So just looking at primary financial services providers, and I've put the slide in to give you some examples or case studies of firms that have launched and are relatively successful, or very successful actually. So if you look at some of the digital banks that have come up, you've got Tandem, Monzo, I'm sure everyone's heard of these banks. Now, these are kind of only internet banks or app-based banks. And then you've got alternative lenders like Zopa, Funding Circle, etc. There's crowdfunding sites. Now, crowdfunding, you've got equity-based crowdfunding, which is regulated. If you've got donation-based crowdfunding or reward-based crowdfunding, that wouldn't be regulated. Insurance is an interesting area, and I think most of the firms that are coming in are firms that are more distribution models. So if you look at Cover, for example, Cover allows young people to get insurance kind of on a pay-as-you-go basis. So they want to drive a car for 4 hours. They'll get through an app. Basically, they can buy insurance for 4 hours. But obviously, they would uninsure that with traditional insurers like Aviva, Prudential, and others. And then wealth tech, I'm sure everyone's heard about Nutmeg. Nutmeg allows you to invest money at a lot cheaper rate compared to traditional investment managers. And payment system, I think that is an area that's kind of exploded, and we've seen firms coming in early in the stage and being hugely successful. So I'll just give you some examples of supporting infrastructure. So these are firms that support the financial services ecosystem. RegTech is a very, very interesting space. If you look at KYC and AML, which is kind of customer onboarding, then firms like Comply Advantage and Contigo, who kind of help you do know your client checks and anti-money laundering checks through different databases. There's reg reporting firms out there which allow you to do a lot more cost-effective regulatory reporting. Interpretation of regulation. Now, people are starting to use artificial intelligence to go in and read regulations, understand the regulations, and then kind of automatically comply as far as possible. And I know the FCA is looking at codifying their regulations so that machines can actually read that, and that's currently on track. Then control automation is another interesting area. Now, RegTech, I think the proposition there is, if you come up with an idea, you could help banks and insurers save a huge amount of money. The figures touted are that RegTech could potentially help to save 50% cost or reduce cost by 50% for compliance. And then the blockchain ecosystem is interesting. So there are kind of many players emerging that provide more infrastructure. And these are people obviously not plugging into financial services at the moment, but plugging into alternative financial services. So there are kind of payment providers, there are wallets, there are exchanges. I'm sure everyone's heard about Coinbase, and Coinbase is getting a huge amount of customers literally wanting to buy Bitcoin. To a point where the system is starting to crash now. Bitcoin mining it's a big area. Unfortunately, we don't have time to get into that. But this is kind of where they validate transactions on the blockchain. And there's other firms that are setting themselves up. And they typically earn in cryptocurrency, Bitcoin, Ethereum, etc. And then there's these currencies that are basically set up. So Bitcoin is on the blockchain effectively, and there's a specific type of blockchain allowed for Bitcoin. So people generally write programs and applications on the infrastructure. These are some examples of what you could do as a service provider. So hopefully that was useful in giving you some ideas on the type of business models that you can start. In terms of the ecosystem, I think in most countries now, there's quite a vibrant ecosystem emerging. And it's certainly something to be aware of, because there's a lot of help out there for fintech firms. So firstly, don't ignore your regulating government. I think the regulators should be, once you have your idea in place, the regulators should be the first protocol to understand whether your business needs to be regulated or not. And there are also a lot of government initiatives that you should know about and tap into. And then there's a host of accelerators, incubators, and innovation labs. Now, I think if you're creating a supporting infrastructure type of business, then I think going into these accelerators typically set up by a bank or insurer is useful, because you then get access to their systems, their people. If you want to set up a disruptor, potentially that's an area that is not going to be very supportive to you, because obviously you're setting yourself up to disrupt the industry, and that is actually set up the accelerator. Then once you start building, you're going to need a whole lot of partners. KYC, ALM providers, AML providers. You're going to need technology platform providers. You're going to need a client bank account to keep their client money in. Potentially, you're going to need a payment infrastructure to take and make payments. And then also, you're going to need those outsource providers like hosting, etc. So, there's a lot of partners that you need to get on board. It's definitely not a solo business. Trade associations are interesting because they help you lobby. And I've certainly seen in the UK, there were a lot of roadblocks for fintech firms in the early days. And trade associations work closely with government to eradicate those. So, those are definitely worth signing up with. You'll be kept informed of what's going on in the industry, as well as your voice will be heard. And then, if you can, joining up mastermind groups, accountability partners, and also external advisors, it's quite crucial that you get that type of support, because you're in a territory where potentially in the fintech space, what you're trying to do hasn't been done before. And so there's no sort of case studies that you can leverage off, and you're going to need people around you that can help you guide you. And there's just so many different areas in fintech that it's impossible to know about everything: regulation, technology, marketing, operations, etc. So if you can surround yourself with advisors, be part of a kind of a motivational mastermind group, that's certainly going to spur you on. And then finally, you're going to have to tap into the funding ecosystem. A lot of angel investor networks out there, individuals that are willing to invest in fintech. And then obviously there's private equity and venture capital is becoming very, very interested in this space. There's also some family offices that you shouldn't discount. Family offices are quite keen to provide loans, for example, to financial services startups. So that's pretty much the ecosystem, and hopefully that gives you an idea of what's kind of out there. How to launch a business for breakthrough success. Now, I think the transition is really, really key. So don't just jump into a fintech business. We've seen that happen, and it can go wrong very, very quickly. Also, if you try and jump in, ironically, people end up staying in that sort of limbo state for maybe years, which doesn't help. So I think have the right mindset. Go in it in terms of stepping stones. So I would say if you're thinking of starting, perhaps go to one of the accelerators, become a mentor if you can, become a non-executive director on the board if you have the experience. And it's a good symbiotic relationship. Get a job in a fintech startup, and that's a good way to understand whether a startup is for you or not. You can also become an entrepreneur. So if you work in a large bank, you may convince your bank to set up for example, an online lending platform, and you could take charge of that. So within the safety of a job, you can create, become an entrepreneur, and that might be one way to go. If you didn't want to start a business, then potentially becoming an investor might be another way. So you may not have to invest a huge amount of money, but once you invest, you'll get closer to the business and get to understand that area. So think about stepping stones before jumping into creating your financial services business. And then security, I think, is key. So if you've saved up a pot of money, make sure that you keep some money aside, because starting a business, I find generally people literally put all of their money into their business, and it's a bit of a gamble because not all startups succeed. So I think go out and do financial planning. Make sure that you secure for your and your family's future before taking the plunge. Then, as we discussed, get support networks around you. Start planning and doing stress tests. Think of the worst case scenario and think of how you will get yourself out of that, and then factor that into your plan. And lastly, we've seen the firms spend a year, 18 months kind of planning. When they get eventually to a launch, and the launch doesn't take off, and all that effort is kind of wasted. So think of how you're going to get the traction in your business. So I think the transition is really key, and you need to think through that before embarking on this venture. But we've developed a model, and I certainly will go wouldn't go into detail right now, but we can create a second webinar to go through those. And there is actually a book that I've written on each one of these areas that's available on the website. You just need to register, and you can download a copy of that book. So I would certainly encourage you to do that, and I will send an email around with the link after the webinar. So very quickly, we call it the fortune model, and we find that there are 7 pillars to building a successful financial services firm. First, you need market force, and market force really means you need to drum up that excitement in the market. And if you manage to do that, you can ramp up very quickly and then build a billion-dollar business within the 6 years that most people successful firms do it in. How do you do market force? Get market force? I think you need something visionary. You need to know how to communicate that vision. The vision is not just for you to become a successful firm, but to actually improve the lives of your customers. And then some people go out and, for example, have Elon Musk invest in their business, and all of a sudden you find lots of other investors wanting to chase the same thing. So there's ways of drumming that up, and then coupled with that, you need a good marketing system to make sure that that message is kind of going out in the right way and that you're attracting customers. Always for operations, so if you've drummed up the market force and you can't deliver on your promise, then as quickly as these people come to you, they'll escape just as fast. So you need proper infrastructure and proper operations that are kind of smoothly operating. And that is crucial, and that's something the regulator is focusing on as well. Be respectful of regulation, understand regulation, know about regulation, and make sure you're doing everything to comply. And I'll touch on regulation in a minute. Team and talent team, you can see that's the base of the pyramid. Without a proper team, I think it's going to be tough to build a highly scalable business, because you need good people in your business. Then from day one, start to build scaling your business. There are different ways on how you can actually start doing that. So, for example, just documenting all the policies and processes will allow you to scale much easier. So, if somebody could take those operating manuals and go into a totally different country, they should be able to set up that operations pretty much the same way that you've set it up in your country. And then, if you look at nurture, this is kind of risk management. We find that when companies are succeeding, they become a little bit callous, and you see that the revenues start to jump usually, but the money is kind of draining out just as quickly because of either mismanagement. They're not focused on the risks. So you need to create a culture and a system where you manage risks and retain those profits and gains rather than wasting it away. And lastly is, every business needs to think of evolving. So you evolve not just when you've kind of done and go and exit or move into become an IPO business, but you'll find along the way that potentially the market forces you to pivot. So, you need to think in a fintech firm on a quarterly basis, whether you're kind of moving in the right direction or whether you need to pivot. So as I say, I think more of this is explained in the book, the ebook, and I'll send you a link to download that. But what I wanted to cover, and this is specifically addressing your question, is around regulation. So I'm just sort of mapping out a process that generally we take our clients through. Most of them will start out with a business idea, and they'll come to us and say, this is the idea I've got. What are the regulatory implications? So the first question we ask is, does that business need to be regulated or not? If the answer to that is definitively no, that can only happen potentially where you've got somebody who understands the regulation and definitely say no, and also getting a legal opinion is very, very helpful. If the answer is no, you can go ahead and launch a business, no problem. If the answer is yes, then you ask the question, what regulations are involved? And this then becomes an iterative process to reshape your business model. So, for example, the business idea may involve actually setting up a banking license type of a permission from a regulator, and that may be too onerous. So then they will iterate that into a peer-to-peer lending or a broking type of business. So that after that iteration, you're going to settle on what regulations to apply for. Now, going for regulatory approval could take, getting a license could take up to 12 months, sometimes even longer for businesses that are complex. So if you wanted to get into the market quickly, then potentially you can operate, at least in the UK, under somebody else's license, an umbrella license, or I've seen firms actually go out and acquire other businesses that have the license that they need. And that's very typical of people who come from overseas. They will find a firm that perhaps is struggling, is not operating. They have the license, but they haven't operated. Or alternatively, they're just looking to scale to the next level. That may be a way to do that. So that allows you to go and launch under somebody else's umbrella, or obviously through your own acquiring a license. Now, if you go the umbrella route, there's no reason why you couldn't later on go and apply for your own license, because being under somebody's umbrella will mean that obviously you don't have the freedom that you have your own license. And the value of your business is going to be depleted as well. So if you want to then go and apply for your own license, the process really is, there's a lot of preparation, and effectively you need to prepare your business like you would prepare it for a private equity funding round. And that's the kind of same scrutiny you would go through from a regulator's perspective. So preparation usually takes a few months. You would then go in and make the application to the regulator, and then they go through a review process and ask you loads and loads of questions which you need to get back to them. And at a point in time, they'll say, we're satisfied that we think you can get your license, and they'll give you typically a reminder to authorize you. These are the final conditions, and once you satisfy those, you can get your license and launch your business. Obviously, at this point, if you don't get your license, then it puts you in a quite difficult situation, because given the history of the regulator, potentially you could go back and reapply, or alternatively you could go down the umbrella license route or trade in an unregulated fashion. So, regulation is a huge topic, and again, we can cover that in another webinar. But typically, if you do these type of activities, then you would need to consider being authorized. So, one is deposit taking. So, you need a banking license. If simply you go and borrow money from somebody and you lend it out, that effectively is termed deposit taking. And so, even if I borrow £100,000 with the view of lending that out to other businesses, then I'm effectively carrying out a deposit-taking activity, and I would need to get a banking license. So, you don't have to think of a huge bank and what they do. Just simply doing what I just mentioned could put you into that camp. Then if you're lending money out to consumers, in the UK that is called anything to do with mortgages. Either you're providing mortgage finance or you're brokering mortgage finance. Then that certainly is regulated. And then any type of sort of broking, especially where consumers are involved, or if you're a moneysupermarket.com where you're aggregating, that would be regulated. And then reference and benchmarking. So if you provide credit data, or you provide a facility to allow merchants to check credit history, for example, that would be a regulated activity. And then any type of investment business where either you're facilitating an investment, like an intermediary, or where you're actually providing investment products specifically, those will be regulated. And then providing financial advice in terms of electronic money, we spoke about that. So if money is loaded onto a card, for example. Now, there are bitcoins and those kinds of things that potentially could get caught under electronic money. Most people think bitcoins and cryptocurrencies are not regulated. But I think at the point where real money gets converted into cryptocurrency, that potentially is an area where you could get regulated. And then payments, insurance broking are regulated activities. And if you hold client money in any form, that is a regulated activity in its own right. And financial promotion is an interesting one. So even if you don't have to be regulated, you should go out and promote certain financial instruments. And that could put you into a regulated camp, and potentially you could be breaking the law. So just to mention, there are 3 criteria in the UK when you're looking at regulation. So firstly, they would look at the activity, as I've just gone through, whether the activity is regulated. Secondly, it's the instrument. So there are only certain type of instruments that are caught within a regulatory net. So for example, Bitcoin and cryptocurrency currently is not a regulated financial instrument, and therefore the activities around that at the moment are escaping the net of regulation. I'm sure that's going to change pretty soon this year, I think. But currently that's the status quo. And then finally, it's the type of customer. So typically, if you're looking at high net worth or institutional investors, there are areas where you can escape the regulatory net when you're dealing with them. Anything to do with consumers will definitely fall into the regulated camp. So hopefully that answers some of your questions around regulation. And now, so that we've kind of come to the end of the presentation, and in terms of next steps, I'll send out a copy of this webinar and the slides. I think if you're thinking of starting a business, obviously this is a very, very generic presentation. It's not going to give you answers to your very specific questions. So just for people on this webinar, I'm happy to provide a kind of a free strategy session or consultation, just for you to bounce off your ideas and just get some steer, and hopefully that's going to be useful. Now, there is a link that I've given, and I will send it out to you after this webinar, where you can book time into my calendar, and you can get onto Skype for a phone call and go through your specific areas. And what I can kind of guarantee is that coming out of that, you'll have a little bit more of a clear direction of where you need to go, whether this is the right business for you or not. So kind of making that open, if that's of interest. So that concludes the webinar, really. If you have any questions, I'm happy to answer them in the chat.